Hi everyone and welcome back. Today we're going to review what are the advantages of being a retail trader. A lot of people underestimate the advantages that we have. I feel that most people think that institutional traders have it all. They have all the money, all the power, all the backing. But I'm going to share with you ways that we can also have leverage. So who are institutional traders? They are people who trade for banks, insurance companies, mutual funds, hedge funds, and they don't have full control over their decision making, okay? So we're going to see how, yes, they have power, but we're going to see our power too, okay? Number one, as a retail trader, we can trade from anywhere, okay? An institutional trader has to be in the same office every day, except weekends, in the same city. As a retail trader, we can trade from our own home, from any device, from any city, okay? And we're going to see how we can actually leverage that and use that to our advantage, okay, in the following examples. So, number two, okay, what are the advantages? An advantage of a retail trader. We have full control over our trading, okay? First of all, how? Time. An institutional trader has to trade every day, okay? No excuse. They have quotas to meet. They have targets to meet. They have to trade every day. If the market is messy, or if the market is messy the whole week, they still have to trade that whole week. As a retail trader, we can pick the right times to enter the market. Institutional traders have to force trades, okay? They can't just sit there all day and not take a trade and then tell their boss that, oh, the market wasn't looking that good, I wasn't really feeling it, I didn't want to take a trade. They don't have that kind of freedom, okay? How is that an advantage for retail traders? I'll tell you me, for example. For my strategy, NFP week is tricky, okay? I can trade it, but it takes a lot of analysis and it can lead to frustration and making bad decisions in NFP week because of a lot of big moves and the price action, the market structure is not as respected as other weeks. So I have the freedom to not trade that week. Institutional traders, they can't take a whole week off every month, okay? By taking that week off, I actually make more money that month. Because as history and data says, on NFP weeks, sometimes I can lose money. So just by taking that week off, I am making more money. An institutional trader has to trade through tough times for their strategy. It doesn't need to be NFP week, maybe on Mondays. Their strategy is bad. They have to trade that anyway. You don't have the freedom to tell your boss that you don't want to trade this day because they will say that they can find someone else who will, or they will tell you to find another strategy, things like that, okay? You don't have full control, and influence of others on your decision making can be tricky, okay? Especially in trading. So I wanted to touch on that. That's a big one. We can choose when to trade. So if you take trades only 3 days per week, that's not a bad thing, okay? There are some days that you should avoid the market. You will learn over time how to see, like, if you're losing 2 trades in a row by like 1 pip, or the market or the trend is not making any sense, you have the choice, you have the freedom to not trade, okay? Institutional traders, they do not have that freedom. So that's a big one, guys, I'm telling you. That's why I trade only 10 minutes a day. You think an institutional trader can do that? No. They gotta be at the office 9 to 5. So I use that to my advantage. I pick when I trade. My data says which days or which weeks or which patterns are the most successful for me. I stick to them, even if that pattern only comes up once a week. I've had weeks where I had only like 2 trades a week. I've had weeks where I've had like over 10 trades a week, okay? But an institutional trader does not have the freedom of time, okay? Controlling his time. They don't have the freedom to control their strategy. I have not made a change to my strategy in at least 6 months, like no change to my strategy, nothing. An institutional trader cannot say that. Their boss and their resources are always trying to push them for development and improvement and learning more strategies. Or they tell you what strategy to trade, they tell you which markets to trade. Like they tell you have to only trade gold, or so you don't have full control over that as an institutional trader. And as trading, with my hundreds of screenshots, my trades are always the same thing, up down, like the pattern is always the same. So I don't need to make a change. But there is pressure. If I traded for an institution, they will always ask me to improve, make changes. They will give me all these like sophisticated data analysis models. Look, yo, hey, you're really good here. Or maybe just use that and develop it. Like, yes, they have a lot of amazing resources to help. But in trading, you shouldn't make changes to your strategy. As a retail trader, we have control over that. Most people, they take that for granted. They say, oh, I have freedom to change it. So they keep making changes because they say, oh, I have the freedom to do it. But that's a trick. The trick is to not make changes. Stick to the plan, stick to your strategy. An institutional trader is always under pressure to make changes, okay? I am telling you ways that a retail trader can have advantages over institutions, okay? One way is to have control over your strategy, avoid making changes, okay? Avoid being influenced by others, okay? And you have independence as a retail trader. As an institutional trader, you have a risk manager, you have a portfolio manager, you have the main manager. Gosh, can you make a decision? They tell you what to trade, where to trade. I'm not sure. That's great because they give you a lot of money and they give you the resources to bloom in that environment, right? But in trading, you don't need that, okay? Number 3, as a retail trader, we face less expectations and less pressure than institutional traders, right? As mentioned earlier, they have expectations to meet. If they don't meet them, they'll get fired. They'll find someone else to hire them and someone else to hire. And also, yes, they have an advantage over their account sizes. They have a lot of money, right? But that comes with pressure and big responsibility. Every trade is 6 figures, 7 figures. They put $1 million trade. So that's pressure, right? They are human. They have emotions. So it's tricky, right? Just because you have more money doesn't mean you can make better decisions or that you will be more rich. That comes also with more pressure. If you lose a trade by 1 pip and it's $1 million trade, it's very difficult to keep your emotions under control and to keep going, following the plan, okay? So a retail trader does not have the same pressure of trading someone else's money. Yes, we can trade for prop firms, but that's different. We are not liable for the losses. We don't get fired. We can just try again. It's different, okay? But these banks and these institutions, they are trading someone else's money. They are not trading their own money. That comes with different responsibilities, a different kind of pressure when you're making trading decisions, right? You don't have full clarity when you make trading decisions because you have all these things to think about. The institutions do their best to make you in the right environment to be well, to do good, but they make you fully aware that they can easily fire you and bring in someone else. So as a retail trader, that's great. You don't have those kind of same expectations. Yes, you want to make it fast and stuff, but if you lose the account this month, nobody's going to fire you. You can try again, right? So that's another way that you can think of how you can leverage your time and your power as a retail trader over institutional traders. Guys, this is a big one, okay? This is another big one. A retail trader has less influence over their trading decisions. Institutional traders, they have different kind of pressures. I'm telling you guys. An institutional trader, they have other people, right, in their office that are maybe looking at the same position, at the same market, and they would take a different position, or they have a different analysis, or your boss tells you don't take that trade, or someone else tells you, no, this market is going down, but your shirt's going up. And other people, like your risk manager, also has influence on how you trade. And your data analysis is going to be different because you have all these voices saying different things, and all these voices like have a point, right? And you have to kind of listen to them. That makes you second guess when you look at the market. You can't. This is so big, like I'm telling you, because me as a retail trader, people think like I'm a magician because I know which way the market is going. Even when I lose, I usually get the direction right. But I don't do that by looking at 10,000 confluences and looking and asking 10,000 people their opinion and doing that. I have to take a few seconds to look. It should be very simple. People cannot figure the direction because they think it's too good to be true. It's too easy to be true. They have to complicate it. Overanalysis is a big one, guys. I don't second guess. I don't double think. If I'm wrong, I'm wrong. I don't care about being wrong. That's why I'm not wrong often. Because I don't care about that. I don't think about that. I only think about winning and being right. If I'm wrong, right, it doesn't matter actually. I just care about, guys, like this is a big one. It's hard to explain, but over-analysis is a big reason why people fail. As a retail trader, you can make your own decisions on the chart. Avoid looking at communities' decisions. Avoid looking at friends' decisions. You have less influence. Like, you can make the decisions you want. It's not like an institution. You're selling, everyone's buying, and like they're looking at you like the bad guy. And then you might, as an institutional trader, you might think, okay, then I have to go the other direction if everybody's going that way, or that's just going to make you double think when you're analyzing the market. So as a retail trader, you have the power of making your own analysis without the outside influence. Do not take that for granted. That is an advantage, not a disadvantage. A lot of things that I'm saying people think is a disadvantage, I'm showing you how it is actually an advantage. Retail traders also have their own problems, okay? Another one that people think that is only a retail problem is fees. Retail traders pay less fees. People think that institutions pay less fees, that retail traders, like the brokers are taking our money. No. Institutions pay way more fees. I'm not talking about just because they have more money, they pay more fees. I am talking relative to their account size. To have access to better spreads, they have to pay for that privilege. Okay, that doesn't guarantee they make more money. They can still lose, even if they have better spreads. Okay, just because you have better spreads doesn't mean they make more money. So, you have to pay for that privilege. Dark pools. I mentioned dark pools in one of my videos. You have to pay for access to dark pools. Dark pools is like a chart, but a private chart that is ahead of the public chart. Okay, I'm not going to get into it in this video. It's in one of my first videos. It's in the video about market manipulation. So to trade in dark pools, you need to pay. To have some privileges, you need to pay. There are so many fees associated with institutions and trading large-sized accounts. So don't think that we are paying a lot of fees. We are really not. It's not that bad. And it's just the cost of doing business, okay? So institutions are paying more fees. They also have problems, okay? Okay. So Another advantage that we have is that we don't affect the market. Our position does not affect the market. When we take a trade, our trade is not visible on the market. We do not reveal ourselves. An institution takes a trade, we can see that big candle, right? Everyone sees it. Everyone knows now their intention or what they're going to, their move, right? As a retail trader, we don't have to worry about our trading affecting the market or somebody finding out our strategy. You don't have to worry about your strategy dying, or you don't have to worry about somebody manipulating your strategy. It's way harder to do that. Institutions have to always try to hide their positions. That is what is order block. Order block is a way to hide your position. Okay? So, that is another advantage, okay? So people that think, oh, my strategy might stop working one day, or somebody's going to take it from me, or the institutions can see on the chart what I'm doing. Don't worry, our trading does not affect the market. You need like $1 million or more to even make a change to the chart. However, you can make a change with like 6 figures on like the 5-minute chart, the 1-minute chart. We can make changes. We can affect those charts. However, institutions, they do not trade on lower than the 1-hour time frame. Institutional traders only go less than the 1-hour time frame to see what retail traders are doing. Institutional traders do not trade on the time frame under 1 hour. It is a fact. Okay, so I know that it's not that there are some things that institutions have better than us, okay? So what are the disadvantages of being a retail trader? This is a big one. I bring a lot of big facts, okay? So, first of all, a disadvantage is that we do not have a boss. We do not have someone to keep us accountable. We are bad at keeping ourselves accountable. We are very clever in finding ways to argument for something, or find a reason as to why we did something or why we didn't do something, or blame something for something not working, right? Blaming the market for a loss, blaming time, blaming like your sister, blaming anyone, just not you. Lack of accountability. That is a disadvantage. A boss, imagine you have to trade, right? And you know that you have a boss. So when you're trading, you're not really going to make a stupid decision. But if you don't have a boss, you're going to feel like you have that freedom, like you think you can gamble, and you could rely on luck, you can rely on hope. So not having a boss is actually a disadvantage. People think that is the advantage of being a retail trader. That is a disadvantage, okay? People are bad at punishing themselves. You can't fire yourself. You're going to keep trading. I mentioned in one of my videos how I'm my own boss is when I break a rule, I do 500 push-ups. I don't have dessert for dinner. Okay? That's how I am being my own boss, because it's very easy for us to find reasons as to why we did something wrong. Okay? Lack of accountability. So that is a disadvantage, not having a boss. You don't have a risk manager, someone that controls your risk. Institutions, they have people that their whole job is only to watch the position sizing of other traders. Make sure they're using the right positions. They're not going to over leverage, over risk, not under risk. They're going to help you along the way, okay? Make the right decisions. If you have a boss, that's going to help you be more accountable of your decision making and your actions. So that is a disadvantage of being a retail trader. You have to be your own boss. People think that's a good thing. That is actually a trick. Okay. That's the thing. The challenge is the freedom of decision making, okay? People think that it's an advantage, but that is the disadvantage. You keep changing your strategies. You keep making freestyle decisions on the chart. Like you just keep changing your decision making. Like you see this, and one day you buy, and then the next day you see this, you sell. You're not consistent in your decision making. Okay, so that is a challenge. The freedom of decision making is a challenge of retail traders. Okay. Another challenge is less capital. People think that this is the big one. As a retail trader, we have less capital. We have prop firms, okay? We have prop firms. You do not first of all, you do not need to trade your own capital. I do not risk my own money. I do not have a personal account. None of my own money is at risk in the market. I don't risk my own money. I only risk prop firm accounts money. Okay? I don't need to risk my own amount. That is actually an advantage, like institutions. They're not trading their own money. They don't need to worry about not eating dinner tonight because they're not trading their own money. That's an advantage of being an institutional trader. We can have that same advantage by trading for prop firms. We can have access to big capital. If you have the skill, you can have the capital, okay? And another challenge as a retail trader is that, yes, as mentioned earlier, we do have less resources to develop a good strategy, okay? Institutions, they have a lot of resources, sophisticated models to help them figure out, like sophisticated journals, data analysis, to figure out where they might be going wrong, where they could improve, what they need to focus on, okay? That is a disadvantage. However, we do have softwares anyway, my FX book that I use. There are other similar softwares like your prop firm. They also have a dashboard where you can analyze your trading so you can make better decisions. There are other tools that are available to retail traders. So I understand that we do have less resources, but we still do. And that is also an advantage because as a trader, you're not supposed to make a lot of changes to your strategy. But as an institutional trader, you're always expected to develop, to improve. Okay? So us as a retail trader, how I improve, I just scale up. Bigger positions, bigger money. I don't make changes to my strategy. I can and I will, but it has to be the right changes. It has to be based on a lot of data. I am collecting a lot of live trading data right now, right? The more data I have, the more reliable my decisions can be and the more reliable my changes can be. I will analyze the time frames that I traded, the pairs that I trade, the days that I trade, the different patterns that I trade. I will analyze all of those and see maybe there's a day I need to stop trading. Maybe there's a day I need to risk more. Maybe there's a pair I need to risk more because I have a higher win rate. These are changes you can make. We have access to data analysis software for that. So yes, we can make changes anyway, okay, with some resources that we have, okay? So that was today's video. I hope it was useful because I feel that a lot of people think that retail traders have disadvantages over institutions, but I'm showing you ways that you can leverage skills and still be just as successful as an institutional trader, okay? So if you enjoyed it and you learned something, please drop a like and I'll see you in the next video. Good luck with your trading.